For more movers, let's welcome in Diane King Hall, who is the host of Morning Movers, and we're talking about Nvidia this morning. Diane, it really just feels like it can't do any wrong.
I know, because even given the indication of how it looked in the pre-market, how it's performing now is it's just flat, essentially. I mean, you think about the records that it hit, just like the broader market last week, and we know that's a part of the momentum that we saw in the broader market. You're not seeing a lot of pushback on Nvidia. Now, it's on the receiving end of more bullish sentiment. It's not helping the stock right now, given the overall weakness that we're seeing in the market, the tariff risk that you mentioned, the trade policy risk that you mentioned, throwing cold water on the broad market, so that's dinging Nvidia as well. But Citigroup is increasing its price target on Nvidia. It's raising it to 190 from 180. That implies about 20% upside from the levels that we saw around, honestly, still here, because we're close to that record high that you hit on Thursday, which was above 159 a share. The move from Citi, that implies just growing confidence in Nvidia, their dominant position in AI and the global AI infrastructure build out. Fueling that, a key catalyst they see there is sovereign AI demand. So we know that countries are building out their own AI infrastructure. They think Nvidia is going to be a key, crucial part of that. They estimate that sovereign deals already contributing billions of dollars in 2025 and more to come in 2026. They're expecting, in fact, a sharp acceleration in 2026. We've seen reports of Nvidia being involved in deal after deal when it comes to these sovereign AI deals. They don't see any bottlenecks when it comes to Nvidia's Blackwell, because that's been one of the concerns with regard to Nvidia, as you well know, Sam. It's not the demand issue, it's the supply issue.
Yes.
Can they address that? Can they address that demand for Blackwell? And the view from Citigroup is that they can, right? The Blackwell Ultra, they expect that transition to be smooth. And they also talked a little bit about CoreWeave. That's the first to deploy the systems for the GB300. That's the Blackwell chip. And they talk about how much production it can do. 50 times more AI content than the previous version. So there's just a lot of upside from there. And they think that the total addressable market for Nvidia's AI data centers, they expect that to reach $563 billion in 2028, which would be up from the previous target.
Yeah, it's interesting because this company has just proven time after time that it is adaptable, you know, as far as even coming up with the China-specific chips as well to sort of circumvent some of those export controls too when it comes to that supply demand dynamic.
Right.
You're talking about Applied Materials as well today.
Yes, yeah. So Applied Materials is that's receiving a downgrade today. You've got analysts there, concerned about competition there. So it's Redburn, Atlantic, with this now Rothschild. They've cut their rating from buy to neutral, so they're moving the sidelines on Applied Materials. They've cut their price target to 200 from 225. They talk about where the stock trades, 23 times earnings, and then they're just concerned over market share. They're concerned about a loss of market share for physical vapor deposition. That's PVD. That's a profit driver for them. If you think about like what that does, it's to do a parallel. It's like spray painting of the chips, kind of like if you kind of compare what it does. It coats the chips with this like ultra thin metal layer, and that's essential for wiring and just conductivity rather. And so there is concern about AMAT's exposure to competition there, and China's ramping up of a response to that. And they think that'll pressure growth and margins for AMAT, especially if China continues to ramp up their domestic alternatives, Sam.
It's interesting the China angle you mentioned as well, because I've also seen some commentary out from Citi actually raising the firm's price target because they seem to be optimistic and positive around the agreement to restore the rare earth magnet export licenses, which obviously is something that they ironed out as part of that framework deal. But obviously that only lasts for 6 months for now. So let's see. But there seems to be some commentary commentary around that too.
No, you make a great point, because I was looking at analyst views at first for Nvidia and for AMAT. When you look at Nvidia, it's largely bullish, right?
Yeah.
It's rare to see, a non-bullish analyst
Yeah.
on Nvidia. Whereas for AMAT, it's more mixed,
Yes.
right? It's neutral to bullish, but there's more in the neutral camp, for instance, than say, and I know it's not necessarily apples to apples, but it's still in the chip space or around the chip space. So you make a great point about there being mixed views when it comes to AMAT.
Yeah.
And today you're seeing the downbeat view, kind of ding the stock a little bit, not as much pressure as you would expect. And again, keep in mind, year to date, it has outperformed the S&P 500, up more than 10% year to date here.
Yeah, it's really important to point out those diverging views. And one other company and stock you're looking at is CrowdStrike.
Yes. I mean, look, CrowdStrike has had a banner year, especially if you think about a year ago in July is where you had that massive outage, right? That significantly hit the stock. Since then, that recovery, when you look at a chart we're looking at a chart, it's been a mountain, a steady climb higher. Today, though, it's being hit with a downgrade. Piper Sandler reducing their view. They're moving to the sidelines. They were overweight, which is essentially the equivalent of a buy rating. They've moved to neutral. They still maintain their price target, which is a little above where we are now. Their price target is $505. They just think that the valuation is rich here, right? They point out that where it is trading times earnings and free cash flow. They also don't see near-term catalysts here for CrowdStrike. So they think, the long-term growth story is still intact, but right now, they think that it's priced in where CrowdStrike is. So you are seeing more pressure on CrowdStrike today, but again, year to date, that stock has significantly up almost 50% year to date. And then on a year-over-year basis, that stock is, done very well considering where it was a year ago.
Yeah, absolutely. It's so important to, mark that event as sort of a benchmark, as you say, as far as the run-up is concerned. There has been a lot of concern that perhaps there is some crowding in this space. But again, cybersecurity, it's not optional, is it?
It's not.
And that's the benefit for some of these companies.
Yeah, and analyst after analyst that I talk to point to that being a key sector within the market where you could continue to expect growth, because every company needs it nowadays, and CrowdStrike is such a leader there.
Yeah, absolutely. Thank you so much,
You're
Diane,
welcome.
for
Thank you,
that.
Sam.
Okay.